Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to have another collaboration with Ryan. He runs a YouTube channel called Uncomplication. He's actually fairly new in launching a channel to the cryptoverse, so make sure you give him warm welcomes. I would encourage you guys to go over to his channel right now and subscribe to him. He puts out a lot of good content. Ryan was, if you guys remember back in April, the March, April, May timeframe, there are a lot of people calling for crazy high prices in the short term, right? 300K Bitcoin and whatnot, almost imminently. And, Ryan was one of the few saying, you know what? We might actually need to go down. We might actually need to go down first. And he did this through some stuff that I'm going to let him share. So Ryan, it's a pleasure to have you on the channel, and we're all excited to have you walk us through sort of what you saw in the markets back then and what you see today.
Awesome. Well, thank you, Ben, and it's a pleasure to be on your show. I've learned a ton from you over the years. I think you're one of the greats when it comes to daily TA and just insights in the market. So I really appreciate getting to come on and talk to this amazing audience. Just a little bit of backstory. Like you said, I'm new to YouTube for sure, and I'm even relatively new to the crypto space. So I bought Ethereum right after the market cycle peak in 2018, and it just kind of sat there going down, down, down. And then earlier this year, like a lot of us, open up the Coinbase account, find that all of a sudden those hidden reserves are worth a lot more. And so earlier this year, having just left a job that I was at for 10 years, I really saw crypto as this just amazing place that I could take control of my finances and my life. And so I went into it with all of the religious fervor that comes with this type of a space. And so I was completely on board with the narrative. I was listening to podcasts and YouTube videos and really feeling like I was educating myself on what these assets were and how profitable they were for normal people to get into them. And then, as most of us experienced earlier this year, starting in March and really continuing in this roller coaster ride as we tried to break out of that kind of 60K ceiling over months and months and months. And I just remember quite a few moments of being really confused why something that was so scarce and so valuable that everyone seemed to want, that we were hearing how the institutional investors were showing up. Why hasn't this taken off? Why isn't it meeting the narrative? And then late one night on another YouTube channel, someone who I'd been following, who was one of the more excited, this thing's going to the moon type of person, showed something about Wyckoff distribution. And at the time, it looked like Arabic to me. It was just a bunch of lines on the chart, and I didn't really understand what this was I was looking at, but I started digging in, and it was akin to taking the red pill in the Matrix. I felt like I was living in this one reality where I thought I knew these certain things. I was, calling friends, family, everyone who had listened, saying, hey, pull out all your money from your savings account, put it into Bitcoin. This is the future. And then this was like the red pill, realizing, oh my gosh, what Bitcoin has just done over months and months, this whole roller coaster that we were on, is a known schematic that smart money uses to get as much money from the public as they possibly can. And so with that knowledge, I started reaching out to the people that I had been following, trying to get their attention and just trying to counteract this narrative that so many people were throwing their money into. And it really was met with crickets. And in this space, I feel like when people want to be greedy, people want to believe that narrative, anyone who's saying something to the counter to that narrative gets kind of flamed. And that's even what happened to this original YouTuber. They were the ones who posted this content, and the audience just had this huge backlash. Thumbs down, everyone was saying, oh, I'm done with this channel. And so it was really clear to me that there was both this smart money, call it manipulation, call it just what a market does, but then it was also mirrored by this whole space of personalities and YouTubers and others that were really fueling the fear and greed cycles that drive a distribution, a Wyckoff distribution. So I'm happy to share what these schematics look like and kind of show how that played out in the Bitcoin price since the beginning of this year.
Yeah.
So if you'd like me to
Yeah,
share
go
my
ahead
screen.
and
If you
share
have
your
any questions,
screen.
feel free to stop me. Yeah.
Yeah, go ahead and share your screen. The only thing I was going to say was, it's interesting because, we were looking at a lot of charts back then too, and we weren't looking at Wyckoff, right? We weren't looking at Wyckoff. We were looking at like how quickly we had moved up in the cycle, and we speculated that we're kind of ahead of schedule. Like, why are we so far ahead of schedule at this phase of the cycle? We need to kind of come back down and be below the ROI from the prior cycle. Not to say we have to be below it, but just to say this would feel a lot better if we were, because that's what history has done. So it's interesting because it was like it felt like we needed to come down. And so yeah, I think if you share your screen, you can show everyone what you were looking at and why, more so from like ours was more say like mathematical or just dubiously extrapolating and whatnot, but you actually are showing you were showing at the time like a real-time pattern that was playing out. And I think from what I remember, you got it you nailed it pretty well back then. Even to the target, I think, to the downside. But yeah, can you share your screen and just walk us through what you saw?
Sure. Yeah, and you make a great point, because I think if you're looking at the technicals on a daily basis, even if you're zooming out, without the understanding of the psychology and the motives behind these moves, we're playing with less than a full deck of cards. So, and that was kind of the realization to me, because I think that when you're looking at trading against, support and resistance levels and fibs and all these things that we can use, they work. But if you miss out on kind of the man behind the curtain, I think that there's a whole side to the market that we're not paying attention to. And that's what Wyckoff was really talking about. So really the first thing that I would love to share, and Inception. Let me move this window down.
Yeah, this is. Oh yeah, that's the fear grid. Yeah. This is what the Wyckoff stuff. Yeah. So walk us through this, and basically assume that assume the audience has never heard of it, right? Assume that there's never heard of it, and just walk us through.
Absolutely. So the first thing I'd like to do then is just introduce you to Mr. Wyckoff. And the thing that was so crazy to me is that he died in 1934. He was really active in educating people in the stock market in the 1920s and 30s. So these are not new tricks. These are very old tricks, even back when Wall Street was, trading against paper tickers and whatnot. But he was working on Wall Street in these big firms, and he observed from his own words, from his observations and interviews with the big time traders, Wyckoff codified the best practices of these traders into laws, principles, and techniques of trading methodology, money management, and mental discipline. From his position, Mr. Wyckoff observed numerous retail investors being repeatedly fleeced. Consequently, he dedicated himself to instructing the public about the real rules of the game as played by the large interests or smart money. And so he founded a school and trained a lot of people in the early 20th century about how the stock market is moved, and how, if you want to be a successful trader, you have to understand the motives behind the market, what smart money is doing and how they do it, and get your investments and your trades in line with those interests. And so this is a great article. I do recommend that you put this in the description for this episode. It goes through a lot of Wyckoff's background and approach, so this is really worth reading. But I think what everyone is most interested in when talking about Wyckoff are his schematics. So at the simplest representation, it's just an oversold versus overbought kind of oscillator with a markup phase and a markdown. And in this market, colloquially, can't say that word, we talk about bull runs and bear markets, right? And so in Wyckoff's view, there's only markup and markdown. If you're smart money, you're looking to mark the price up, or you're looking to mark the price down. And the way that they do that is with these distributions and accumulations. So let me jump over real quick. I've kind of condensed some of this info into just some slides that make it a little bit easier to show. And this is a clip from the video that I had originally posted back in April. And so you can see here on the left side, this is Bitcoin's price from February through April when I posted the video. And again, the red pill moment for me, the matrix moment, was just, I was in the daily TA, I was in the flow of this, and it always felt like we had a chance of, the bulls overcoming the bears, or, are we going to break through this resistance? And then when I saw this and how it matched up almost 1-to-1 with a Wyckoff distribution, it was really clear to me that all of these moments that in time kind of felt like a natural occurrence of the market were really a campaign that was being run to take an asset that had been accumulated over the bear market. So for years and years, I think I counted it was 700 days from kind of where I think that the last accumulation started to where the markup phase really started. So 700 days, smart money, large interests were accumulating. And so this is a campaign that essentially takes that asset, marks the price up, and then gets it into this trading range where they can control the price and they can sell that holding of stock or Bitcoin or Ethereum or whatever it might be over months and months and weeks, keeping it in this range so that they can keep the prices high without losing control, and they can keep it from, when you flood a bunch of your holdings onto the market, you can affect the supply and demand and drive the price down. So this keeps it in this trading range. And if you're interested in it, go read that article. I'm not going to go through, move by move what each of these are. The buying climax, the automatic reaction, all of these things are sort of orchestrated events that basically test supply and demand, test where the buyers and sellers are, shake people out in certain places, and get people to FOMO in others, all in this distribution where they're distributing and selling at the highest price possible their holdings. So the thing that now, this is April, and we had this really textbook distribution event, which for me was like, I don't know, crushing, because I really believed in Bitcoin as being decentralized, not manipulated, the people's currency. I bought into that narrative. And so this to me was kind of a crushing blow to realize that those things are true, but this is also a market, and markets have always kind of fallen into these patterns. So the other pattern then from the distribution is the accumulation. So again, this sort of overbought, oversold, once the distribution happens and supply exceeds demand, it drives the price back down into another accumulation range. And the thing that's really interesting is that for the last couple months, you can see here on the bottom, these are just the two distribution and accumulation schematics stitched together. And here is that same Bitcoin price chart that I was mocking up with the distribution. And now we are, again, sort of mirroring this textbook accumulation. Now there are differences. People call Wyckoff patterns snowflakes. So they're all a little different, but when you see one, you can recognize it. And so you can see this was my last video back here a couple of weeks ago, and I put a dotted line to kind of show it's not really a prediction. It's just, if this schematic holds, this is kind of what it's calling for. And you can see that we've kind of gotten into the same sort of show of strength. We're back above this horizontal where we're kind of bouncing and finding support. And so, from appearances, it looks like we are at the tail end of the accumulation zone, which then can drive another cycle of kind of that greed-driven, everyone's buying in, up until there's another distribution, is the hypothesis that I am, working under. So, the other thing that is important to me here is that I think people tend to see this information and they say, okay, great, we have the cheat code now. We know what the market's going to do. And I've seen, especially after that first video came out, when everyone was in fear mode and panic and looking for the rationality behind it, people were applying, Wyckoff distributions and accumulations to, much, much smaller time frames.
Yeah.
Which you can do. But to me, the more important thing about Wyckoff is not just, hey, here's a cheat code for how this market is going to move in the future, but it's really understanding what he was trying to teach is that what drives these patterns, sure, there's some funny business going on by large interests, large holders, smart money, but it's really driven by our own emotions, our own fear and greed. And just when you think you've got the game beat and you get in that greed mode is when they'll flip the switch and scare everybody. And that process ongoing on big time frames and small time frames is really now how I've come to see how this market moves.
It's interesting because I remember back to the March, April, May, that time frame. We went to 58K. I don't remember exactly when it was, but we went to 58K, and then unlike prior moves, unlike other major tops in Bitcoin, we were not really continuing much higher. Like we went 58K, then we went 61K, and then we went 64K. But it was very in a lot of ways, it had not looked like prior, tops. Even, and I'm not even referring to say like market cycle tops, but even just like local tops of say like middle 2013. But I mean, it makes sense. We've had some people on the show recently that they've either they have a lot of insight into how the institutions work and whatnot. And if you think about it, if you have a blow off top that lasts for just a couple hours, most institutions can't take advantage of that. But if you have a phase that lasts, 2 or 3 months, you can offload tons of the asset, right? You can offload a ton of it over those few months and then not really move the market. So it's interesting because it's sort of, obviously looking at it now, it seems like it makes a lot of sense that it lines up relatively well. I do agree the whole accumulation stuff. When we first came down, we had people on the channel saying, hey, this is like a Wyckoff accumulation on the 4-hour time frame and whatnot. And I told people back then, I'm like, we might have Wyckoff accumulation, but it needs to be over months, right? Over months. And so it looks like, again, it's not a perfect one-to-one, right? Because I think, is the spring technically supposed to be lower than the price that sort of happens in the middle? But it's not a one-to-one, right? You can't expect things to play out one-to-one. And I think you could look at the spring anyways and say, well, this was actually an area where a lot more people were able to accumulate because we actually spent a few days down there rather than just a wick earlier on. So I think now it's interesting because we've said on the channel before, the bearish times are for buying Bitcoin. Like that's when you want to buy when everyone wants to sell. So that's really interesting because I feel like we're sort of coming out of this potential accumulation range, and now I guess the question is where does this take us? Like if it's a big if, right? It's a big if. If this is the show of strength, where do we go from here? And do we just go through the prior distribution phase like easily, or does it take a lot of work to get through it?
Yeah, so let me pull on some of those threads. A couple of things you said sparked some ideas. So first of all, like you said, compared to the parabolic blow-off tops that we've had in previous market cycles, that was one of the things that I think we all felt in this market cycle, is that we wanted that parabolic move. We kind of felt that intensity in February. And then if you look at just, from the form, the shape of this, in past cycle tops, we just had this, rocket ship, and then kind of the crash and the relief rally, and then just this kind of slow tumble. And this time we had that same sort of launch ramp, like you said. It was actually a little bit steeper, but then it just was rounded off, right? Like all that excitement was rounded off, and it got stuck in this trading range. And so the answer to your question for me personally about where we go next is, I think the part that I'm taking away from this is that when you are living through a distribution range, it's not just the technicals, it's also the sentiment, it's the news cycle, it's how people are feeling. And so when it's in a distribution phase, they're trying to keep that sentiment, on an upswing when they're moving the price up towards those, secondary tests. and then they're bringing it back down into fear so they can just keep it in this range. And right now, as we kind of know and can look back and see, if this is truly an accumulation, Wyckoff accumulation, we all just maybe snoozed or were so shell shocked that we missed what was, possibly the best buying opportunities of the cycle. I mean, I've been kind of buying in small amounts through all of this, but no one really knew if this was going to go, up or down, right? So my point is, in the accumulation, the news is bad. They're trying to keep people from buying at these prices, and that's what these kind of springs are. It's scaring people even more to find where those last sellers are. All of this was just to shake out the people that were holding on, like expecting that next run. And so my long answer to your question is, the thing that I'm taking away from this is not so much where the price will go next. And I'm actually far less interested now in the predictions of experts that are calling for, based on the technicals, we're going to 220, we're going to 300, we're going to whatever those predictions are. Like, I believe in the long term, and I just watched your interview with Plan B and really have a whole new understanding now of the stock to flow model and those kind of scarcity models. I think that's my mindset, is just recognizing the fundamentals behind the projects that I support. But for me personally, the day-to-day moves of the market, I just see that as playing chess with these interests that are trying to get you to do the wrong things at the wrong times. And so I think if, as soon as people say, all right, we've cleared this accumulation, we're back up to, predictions of 220, I'm going to pull my college savings or my kid's college savings account balance and put it all into Bitcoin. That kind of mentality that I think a lot of people had in the spring, I don't see why it would change now if we do get back into a markup phase, that we're going to have this kind of rocky roller coaster ride again of fits and starts. And if we do get to 220, it's not going to be a rocket ship. It's going to be the same kind of orchestrated moves over months and months, again with the interest of fleecing the public, getting the most out of these assets that the smart money can. And so I just want to show you a couple other things that to me is even more important than the technicals. So here's the Wyckoff distribution accumulation. I have this slide. So what? Well, if you look at the fear and greed index and look at the view where you can actually look at it plotted over the last year, it's almost the same pattern. It's in some ways it's almost a mirror. And so to me, the understanding that when people on major news outlets or even on YouTube are again blaring their bullhorns and screaming, and we're back into this extreme greed mode, is not that, like you said, it's not the time, and this is just for me personally, it's not the time to be FOMOing in, to just, abandon all sensibilities and believe that narrative. That if there's this greed, it's going to be matched with the fear. And this happens on big time frames and small time frames. So that to me is the bigger takeaway from this, is that I have really found out what kind of trader I want to be, and I'm actually getting back to more the way I came into this market, which is like a long-term perspective, zoomed out. And I'm trying very hard to not get swept up into these daily question marks about what is it going to do over the next week or the next months, because I do feel that we as a crypto community have played into these cycles to a T with our own speculation, our own on days when things are green, everyone is going nuts and there's just joy and people buying in. And then when things start turning the other way, I have some of these shots, and we've all experienced this, but not to pick on any of these YouTubers, but this is what we get on a day when things are, going down, even over a short time frame. So we're always kind of toggling between the 10 exclamation points, everything is great, everything's going to the moon, or 10 exclamation points, this is doom and gloom. And that's what's getting people to do what the Wyckoff distribution is trying to do, is to get you to buy something when it's the most expensive and then scare the pants off of you so you sell that at a loss so it can be reaccumulated. So
I think it makes sense. I mean, a lot of the YouTube thumbnails and whatnot are essentially the manifestation of human emotion, and like they're playing off that, right? They know if you're fearful, and they're going to get more views if they kind of play into that. And the same thing, if you're greedy, they're going to play into that as well. And that's where, it doesn't take long, as we say, right? Sentiment can change in a dime. It doesn't take long for people to completely do like a 180 on sort of like what their predictions are. I think you're right. Like, I think just in general, people need to, when the market is fearful, that's generally the time to buy, right? That's the time to DCAN. And, no one's going to fault you for not catching the bottom, if you just come up with a strategy. And I think, as you said, long term is essentially the only, in my opinion, it's the only good way to navigate Bitcoin and crypto, is you have to think long term. You cannot think short term. And to some degree, even the people who bought in, right? Even the people who bought in, say, April or May, as long as they don't panic sell, then Bitcoin will likely eventually bail them out, right? It's just a matter of time. That's what Bitcoin has done over the last decade, is people come in at the peak and then they just have to wait a while and then they get bailed out. Fortunately for the people that bought in back in April and whatnot, I do think they're going to get bailed out. I don't think they're going to have to wait like 3 or 4 years to get bailed out. So there's a lot of interesting things there, because I look at this chart, and I guess here's a question for you. Because we all want Bitcoin to go up, right? We all, well, I guess I shouldn't say everyone. There are some people that would like to see it, just go back down to 10K or something. But generally speaking, we want Bitcoin to go up. And I look at this chart and I say, okay, there's a ton of similarities here between, say, the sell-out, the distribution phase, and the accumulation phase. Does a Wyckoff, in your experience, does a Wyckoff accumulation phase always directly follow a Wyckoff distribution phase? Or have you seen charts where it took a little bit longer to get to that to the accumulation phase, or does it tend to happen just like right after it? Do you have any insight into that?
Yeah, and you make a great point, because one of the things that just like floored me about this was how textbook it was. Because as we were talking about earlier, and even when we look at the side-by-side chart, it's not exact, but it's pretty darn close. And as I was learning more about Wyckoff, and I was watching, there's some great videos of people that are just talking about Forex trading, or, not even crypto, but just how these cycles work. One thing that I really took from some of those explanations is that you can typically look at the moves that the market is making, big time scales, low time scales, and you can see these principles at play. That's sort of the snowflake effect. You can say, oh, okay, I see how that was a test. I see where that was a spring. But they're not one-to-one with the schematic. And so the fact that we just had what looks like the drawing of a distribution, and now we're in the midst of, it's a little bit less exact, I would say, than the distribution was, but we have a pretty darn convincing representation of an accumulation phase. My theory is, and I could be totally wrong, is that because crypto is such a new and emerging space, and the people that are here are retail investors that are trading on Robinhood apps, and they're not trained Forex traders. I think that the smart money has been able to accomplish something that would be a lot harder to do in a more traditional market, where people know these tricks and traps. There's probably a lot more responsible use of money. If you are like a Forex trader, like you're not likely just making decisions in a flash moment on your Coinbase app, right?
Right.
So my answer to your question is that in other places that I've seen this, and I have been looking at other markets, other examples, everything from Apple stock, these types of things happen, but they don't look this textbook. And I feel like in crypto, it's almost like these interests were playing unopposed, fueled by the fear and greed of Twitter and YouTube. And so they were able to basically draw the chart. right? They drew the schematic in the Bitcoin price. And so I don't know how long that can go on. And just the fact that there's, blabbermouths like me now on YouTube kind of countering some of the FOMO and the FUD. I think that this type of textbook distribution is, in my opinion, not likely to continue to be the norm, because the market's going to get wise to it. People are not going to be pulling,
Right.
selling organs to FOMO into a Bitcoin narrative after we've seen.
Well, you underestimate
That's
people's
true.
ability to learn from their mistakes. I will say.
That is true.
But I mean, that was going to be my next question. Like we sort of saw the distribution play out, and a few different people talked about the distribution when we were up there, and I think you were probably the most vocal about it and saying, hey, some people have looked at this, but they're sort of writing it off just because it's not popular. And you're like, well, we're going to actually keep talking about it, even if you guys don't like it. And
Well, the funny thing is, I recorded that video because after the YouTube sphere told me to, or there's just a closed door there. I just recorded that video so I could send it to my friends and my family.
Yeah.
Like, it was just, I was tired of trying to send people to these chart trading schools and expecting them to learn. So
Hey,
it was very, very random that my video was the one that got found.
the people who are the people who are brave enough to tell what they think are the truth can often be at the time very despised by the masses, and it only comes out later. You can only really know when you look back on things to see kind of how things went. But no, I mean, we looked at it back then, and okay, we had the distribution, and then what's interesting, I find interesting, is that we came down, and again, I had all these people telling me a Wyckoff accumulation on the 4-hour time frame, and I said no, like if we're gonna have it, look for it over like a monthly time frame. So it's interesting because I do feel like, and the only reason I was talking about it at all was because of everything, of all the stuff that you were putting out and whatnot, and talking about distribution and accumulation, and it's interesting because it's almost like people were looking for the accumulation. And it still happened, it still happened theoretically. I mean, now of course we don't know what's going to happen tomorrow. Like for all we know, we're going to come back down. But like I feel like, I mean, personally, I've been accumulating Bitcoin like crazy the last 3 months, and I actually did sell a lot back in April and May. Just because for a few other reasons, but when I look at it, I say it very well could be our reaccumulation phase. Seems like a great reaccumulation phase. It seems like Bitcoin should ultimately trend higher, but it's interesting just because it seemed like everyone was looking for it, and even though everyone was looking for it, it still happened. So then my question to you, and you kind of were already starting to answer this question, is. And you mentioned it before, you sort of touched on it before. Everyone looks for a blow-off top, right? Everyone wants to time that blow-off top like to the T, and they feel like if they miss it, then they're a failure, right? They couldn't get it exactly at that point. But what if future peaks don't look like a final day where it goes up some crazy amount, but what if instead it looks more something like this? So that's the question, will the future sort of blow off tops, if you will? Do you think now that people know about the Wyckoff distribution stuff, do you feel like it's more unlikely to play out like that? Do you feel like we're going to go more so back to the blow off top type thing? My thinking is, I don't really want to tell my thinking. I'm more curious in what your thinking is, because you're the one who's been talking about this stuff. So what do you see? What do you envision for a future? And I know I'm not even talking about the price, right? Because I know you said the price is somewhat, I agree, the price is somewhat irrelevant, right? You want to look at long-term investing. But what do you think it would look like? Do you feel like it's going to play out exactly how it played out last time? Do you feel like it'll be a similar type of distribution, but maybe not the exact same way, so that it's not, as down to a T as it was? What are your thoughts?
Well, my immediate response, kind of slipping the noose of the question, is I have no idea. I'm excited to see, but I will say that I agree with you and others who have made the case, just based on the data and the maturity cycle, I think, of this market, that we are going to see, I believe, some diminishing returns. Right. When you look at the BLX on a logarithmic scale and turn on the logarithmic regression, you can see really clearly how, going back to the blow-off tops that we had in 2013 and like that whole growth of Bitcoin as a marketplace is kind of coming to a tapered off. It's still logarithmic, so you're still going to see, I think, much higher prices than anything we've ever seen before. But I think just the sheer volatility and the ability for Bitcoin to jump by, thousands of percentages every cycle, I think that even with the stock to flow model and the variance, how that has, except for this dip that we just had, which might just be this maturing of the market too, that variance is also getting more close to the statistical average.
Right.
So my prediction is that Bitcoin is likely to become a marketplace more like other markets, where there is an attenuation of the blow-off tops and the huge crashes, just because there will be more institutions here in this space playing. The way they play is by, getting things stuck in trading ranges for long times and doing their thing, and then, kind of going through these overbought, oversold cycles. That's kind of how I'm currently thinking about it. But if this all of a sudden jumped to 200K tomorrow, I also wouldn't be surprised, because it's Bitcoin. And when all bets are kind of off. So I know that's kind of slipping the noose on the question. I wish I had a more, a better kind of crystal ball. But again, when I got off that main narrative of this is just pure scarcity, it's going to the moon, and I kind of realized that the people that have been accumulating it have a plan for it.
Right. Yeah.
And Wall Street has always come in and done these types of things with anything that's valuable. Is they play these games, they have these abstractions. I think we're going to see a lot more like investing products that are based in crypto, but you're not actually owning the crypto, and it's all just going to have the effect of kind of taking this very volatile and potentially very profitable Wild West, and just kind of domesticating it, making it something that grandmas and retirement funds are going into. And this could be one of the last times that we see a cycle. Well, it's already different than the last cycles, I think.
Yeah, I mean, every cycle is completely different from one another to some degree. I mean, in terms of the blow-off tops, you're right. Like the other cycles were more similar. Yeah.
And so, I'll leave it with this as far as the whole Wyckoff song and dance. But again, for me, this just allowed me to kind of pick my head up from the charts and the daily view and get back to the why behind my participation in this market at all. And it is more about how cool these projects are, how powerful the technology is, and that I do believe that with the fiat currency system as it is smart for a normal person to diversify how they store their value. And so to me, it gets back to just making a plan. And for me, that plan is more how I wanted to get into this market in the first place. It's the long-term view. It's that this is not something that I'm trying to catch every peak and valley on a weekly time frame, but really I'm just over the long haul. I'm going to be moving more of my what would be sitting in the bank into different crypto projects where they can be earning different interests in staking farms or whatever. Like it's just a new financial frontier.
Yeah, I mean,
but to kind of separate from thinking that I'm going to be this amazing day trader that's just going to make my year's salary in a couple minutes a day. And so my advice to myself and to people, friends and family that have gotten in, especially this cycle where there are so many on-ramps to, download Robinhood, and now you're plugged in and you can, in a minute, buy and sell tens of thousands of dollars worth of crypto. The first kind of piece of advice that I've been giving people is to use better tools. And it was shocking to me to see some of the interfaces on these consumer apps that just drive the fear and drive the greed. At any given moment, it's putting you in that place to help bend this Wyckoff curve to a T. This type of interface that looks like it's a submarine about to explode, of course you're going to sell. So getting off those types of products and getting onto just, I love TradingView just because it's a great place to actually zoom out and have a bigger perspective. The charts that you get, even on Coinbase, they really don't give you a good picture. So just using better tools. When in doubt, zoom out. So when you look at Bitcoin over the long term, everything that we just went through just kind of condenses into this little window of time. You can't see the day to day. You can't see all the emotion that we just experienced going through the ups and the downs. You just see this bigger picture of a new type of asset that has been appreciating over time, that is scarce. And I think if you can see that, then it allows you to say, you know what, all right, yeah, my Bitcoin portfolio just dropped by 60%, but I'm not going to sell and try and buy back lower, try and beat the system. I'm just going to be patient and have that kind of a long-term view. And then the last thing that I've just really been stressing to myself and others is know yourself. And a lot of people, I think, get into this market because they think it's easy. It's easy to make money, so they start learning TA, they start trading and over trading, and that's great for some people. Some people really do that well, and some people really have the time and the space to get into that level of technical trading. But for a lot of people, I think not even having that impulse and just kind of saying, you know what, my plan here is I'm just gonna DCA in, maybe DCA out when things are, in these greed cycles, and just, kind of realize some profits, but just simplify your approach to the market and find a way that you can integrate it into your life so that you're not stuck staring at charts and, indicators 24/7. Because I was there earlier this year, and I've seen so many, friends and other people just get sucked into this. And so that's kind of my whole spiel in a nutshell.
I like how genuine you are, and it's like, yeah, we don't know what's going to happen. We don't know where the top's going to be, but come up with a strategy to navigate it no matter what happens, right? And that's the key thing. Most people are going to lose money day trading. I tip my hat to those who can do it. I can't do it. I would lose money if I tried to day trade, to be completely honest. And I think too, you said a lot of good points, right? Come up with something that works for you. And what works for you is probably different than what works for someone else. And, if you're in your 20s, you're probably going to be riskier than if you're in your 60s. So, the idea of giving people a hard time for taking profits and whatnot, you don't know what they're going. Maybe they need the money for something, right? And so yeah, I think that crypto, I agree. I think crypto it offers an investment opportunity. Probably, honestly, the best one of, as far as I've seen, the best one of our lifetimes. In terms of such a, like it seems like it's going to trend up in value over the long haul, and we know there's going to be shakeouts along the way. But yeah, come up, as you said, like as your screen shows, right? Make a plan that's right for you, and then just stick to it, and ignore all the ignore the peanut gallery telling you what you're doing wrong and whatnot. Just stick to your plan. So I think that's great advice. And again, if you guys aren't subscribed to Ryan, go subscribe. Okay, he's got a lot of great content, and I'm guessing he's going to continue to make YouTube videos throughout the cycle. Remember, he is new here. So always give him the warmest of welcomes. And I would say, it's honestly a breath of fresh air to see more people, like yourself, starting their own YouTube channels that are trying to actually help people. Like there's a lot of people out there that are not so interested in that, but you are really trying to help people. You're telling people what you're seeing, even if it goes against what the herd wants to believe. So guys, I feel like you should go subscribe to Ryan. He will be a voice in the space that you're going to want to listen to, especially when things are crazy to the upside or to the downside. It goes both ways. Well, Ryan, did you have any last words before we sign off here? I think you've done a great job of walking us through Wyckoff distribution, Wyckoff accumulation. Hopefully we're at that show of strength, right? Hopefully that's where we are, because we all want to see Bitcoin, hold the 20 week and whatnot. And it's kind of funny because we're right at that same spot, like on the show, like that's right where we are. Hopefully that plays out. But any last words as we wrap it up?
Just a huge word of appreciation for you for being, one of the good ones out there that's just, sharing your wisdom and your light. and I appreciate you having me on your show.
Anytime, yeah. I'm sure we'll try to have you on in the future, especially if we get into another maybe distribution phase or something.
Yeah, I am curious to see, if things pick back up and are really on a rocket ship. I don't know that the things that I have to say will be as, interesting. It just remains to be seen. In crypto, I don't see myself as a crypto YouTuber. I just see myself as someone who kind of has a story to tell and some information to share. And so on my channel, I'm hoping that can just expand. And Uncomplication is a lens that I want to point at a lot of different topics in life. Bitcoin and crypto kind of being the start of that. So yeah, thanks for the promo, and I'll see you guys next time.
Yeah, thanks for coming on. And by the way, guys, go subscribe. I'll put the link in the description below. Uncomplication on YouTube. Thanks, Ryan. We'll see you next time. Bye.
Cheers, Ben.